Hi, I'm Keith Schaefer, editor of the Oil and Gas Investments Bulletin. I write a blog on small cap energy stocks, and I have with me today the CEO of Permex Petroleum, Mehran Ehsan, who operates in the Permian Basin. Welcome, Mehran.
Thank you.
So one of the things I wanted to ask you about, being in the Permian, we've seen huge oil price volatility down there. Well, we've seen it all over the world, but certainly the Permian, because of the huge increase in production we've had, has gone up and down quite a bit in the last year. So maybe, can you give us a little perspective on what happened, why that happened, and kind of where we're at now and what the trend is here in early 2019?
Absolutely. You know, the differentials did go up and down quite a bit in 2018. And a lot of that...
So the differential is the price difference between...
Correct. WTI, for instance.
Which is at Cushing.
At Cushing, and what we're getting at a wellhead, essentially.
Right.
So a lot of this is to do with the added production in the region. There was a staggering number of wells that came online as oil went up. And that provided the infrastructure issues that came up. There was not enough pipelines, so we couldn't get our product to market. So the competitive pricing changed, and the differentials grew. The same problem that we had in Canada, similar problems there, but not to the same extent.
Right, so when we get a big problem up in Canada with the differential blowing out, which means that our discount to WTI prices gets bigger, you know, it becomes a big political issue. But down there
was no such thing.
Yeah, the politics doesn't really work that way. It's strictly a non-emotional,
that's exactly
logistical
right.
thing. So what's been happening to kind of alleviate, to make that pipeline situation better? Are we seeing a lot more pipe? Or
we are. There's multiple. See, that's the beauty of the state of Texas and New Mexico. When there's a problem that is to do with a product being out there and they just need to get it more to the public, they, instead of throwing wrenches and hurdles like our Canadian government at times does with red tape, they do the opposite. They remove the tape. So there are multiple pipelines coming into play. By 2020, hopefully this differential will be zero, so there'll be no discount. So all the producers will get WTI pricing, or the Cushing pricing.
So how deep did the differential in the Permian get to, and where is it at now?
I think it's wise to break down the Permian a little bit. Just to take a look at it, the Permian represents the eastern shelf, which there was no discount. If you look at Stonewall County, if you look at Nolan County, Jones County, there was no discount. You go more towards Midland Basin, there was more, and Central Basin even more. So the differential reached to close to $22 at some time in 2018.
And where are we sitting at today, roughly?
Again, it's different between the basin, but you're looking at $6 to $7 still, and some of the areas $9 still. So the differential still exists.
And really, so what happens when you have a differential like that, a difference in price between the hubs, the pipeline company gets to make that up, right? It's not like that money disappears; it just gets transferred from producer to pipeline operator.
That's exactly right. That's exactly right. It'd be a good time to be in the midstream side right now.
So for you as a small cap operator, how do you kind of get around that? What kind of business strategies do you have to get around these differentials? Do you have more flexibility, less flexibility as a small cap operator? Or?
Well, that's exactly the point. You got to take a look at it from a grand scheme of things. We are not a large player. We're a micro cap. So our production doesn't impact us as much as it would someone that's producing 20, 30,000 barrels a day. For a company that produces 240 barrels a day and we're looking to grow it to 500 barrels, it doesn't impact us that much. Yes, we have to negotiate with our purchasers. Yes, we have to go around them. But there's ways that you can do that when you're a small player, versus that you will not be able to do so when you're at much larger production rates.
Now, because you've got properties in different parts of the Western Permian, do you truck a lot of oil, and what's going on with trucking right now? Because it seems everywhere in the energy industry in North America, whether it's Canada or the U.S., that seems to be a big deal. What's happening with trucking?
That's exactly right. We do use trucks, and that's one of the things, again, the demand is so high for trucking that the supply, it just cannot keep up with the trucking even. So if you look at our eastern shelf, it's all trucked by Sunoco, oil and gas purchasers. If you go into our central basin, we are WI partners with Occidental Petroleum, so they're the ones that are purchasing it. Oxy USA is the one that purchases it, so we don't use the trucking there. But yes, you're correct. Trucking is used readily there, just like Canada, and it's becoming a problem even for that.
Okay, so we've talked about pricing in the Permian. We've talked about some of the logistics in the Permian. What about manpower? Getting drill crews, frac. Well, you guys don't frac.
We do not.
But what's it like getting labor and services right now?
Okay. So as far as drilling rigs are concerned, vertical rigs available, readily available, because majority of the Permian, they're going horizontal and they're doing fracking. So just to reiterate, we currently do not do fracking. As we move forward through our unconventional resource plays, we will be doing fracking as well on our horizontals. It is tough. By nature, just the fact of there's so many DUCs out there, drilled uncompleted wells to come online, so many other operators continue drilling in this area. It's a logistical nightmare to a degree. That is hopefully going to change as we move forward.
There's a lot of trucks at the stoplights in Midland. Takes a while to get through that small town.
Yes, it does. Yes, it does. Unfortunately.
Now, you have chosen at Permex to go after a very shallow formation called the San Andres, which by definition, shallow means low cost. What are you seeing with your results there, and what's kind of the strategy to grow up your production?
Sure. It's worth to point, the San Andres Formation represents 1/3 of the entire production out of the Permian, historical production. So it's a major producing formation. Yes, it's shallower and it changes depending which part you go. If you go into Lee County, New Mexico, it's a little deeper than if you are into the Gaines County or Andrews County of West Texas. 4,000 to 5,000 feet is the depth typically, and it's a great rock. Not all rock is made the same. The San Andres is one of the best rocks you can produce from.
Now, generally speaking, the deeper you go, the gassier your production. The way oil cooks is the heavy oils is what they call less mature oil on top, then light oil, then nat gas. So I'm guessing that at that shallow vertical depth, that your gas content would be quite low.
That is correct.
What can you tell us about that? Because gas really isn't worth anything, so that'd be a positive for you. But what tell me a little bit about what kind of oil gas ratio you have. And
we typically have a 90-10. So you're correct. In Gaines County, given the shallow nature of the San Andres, 10% is nat gas, 90% is oil. Good gravity, anywhere from 39 to 49 gravity. In Gaines, we're having around 39 gravity.
Wait a minute. You're having that light oil, that shallow.
Correct.
That's really unusual, isn't it?
It is.
That's really unusual. Is there anything you can tell me about that? Why that would be?
There isn't. No, it's just, again, not all rock is the same. The San Andres and Gaines and Andrews County is a great formation to produce from, and the gravity is exceptional.
Oh, I didn't realize that. I would have thought that would have been much heavier, thicker, gooier.
Now, as you go into Chavez County, as you go into southeast New Mexico and produce the San Andres, it becomes heavy crude. It gets heavier and heavier. But if you're producing the San Andres in Andrews County, or if you're producing it in Gaines County, the API and the gravity is nice.
Okay. Now, all right, so that makes me think about what kind of M&A opportunities are there for a small operator like you? So you've got a couple different land packages, and getting a big multi-thousand acre package is a little out of your realm, but what kind of opportunities are there right now in that Western Permian area for small tuck-ins, bolt-on acreages?
Sure. It depends on which parcels you're looking at, how many benches they have. If you're going after any type of section or two section in certain areas, as a small operator, it's going to be very tough for us to find. But on the other flip side of this, a lot of these large caps are going for parcels that are 4 or 5 section and higher to be able to do multi-legs on their horizontals. So when there are offset acreages available that they do not want, those are acreages that make sense to us, and we go target them. So the opportunities do still exist as we target smaller parcels than they would.
And do you have a full-time M&A person, or you just kind of deal with this as it comes up?
We do it as a company overall. I think every one of us, we have multiple petroleum landmen that review properties for us. We have our engineers that review the engineering side to make sure it's a fit for us. From a geology standpoint, we have to pass them through sniff tests. From a geological standpoint, is it something we want to produce from? Is it something we're comfortable to produce from? And then it moves to the next stage for us.
Got it. And so right now you're looking to increase your production and your land spots. You're raising some money to do that. You've already basically tripled production since you went public. You want to tell us a little bit about how you've done that and what you see kind of the use of proceeds for in this next round of financing?
Sure. To this day, our main focus has been to use capital to acquire assets at a discount. Every dollar we could have spent towards CapEx would have been a dollar we could have bought assets during a down cycle. That's what we did. Now, since we've been public, again, small production increases. We're not producing thousands and thousands of barrels yet, but we're at 240, anticipating to get it to 500 through vertical wells, and then getting it above 1,000 through horizontal legs within the San Andres Formation.
And I also see on a place on your website that you're looking at doing some enhanced oil recovery, some secondary oil recovery. What are your plans for that? And is that near term? Is that down the road a bit?
Yeah, I think one of the things I need to discuss is whenever we think about EORs or secondary recovery in Canada, it's much different than the way we look at it in the U.S., especially the Permian. On the Canadian side, whenever anyone hears secondary recovery, they assume that it's a depleted field to a degree, and they go in. But from a U.S. operator standpoint, EORs are exceptional. You require minimal amount of capital injection if the patterns are right, if the sweep patterns are good, to increase production. So we have 6 fields that we can do water floods on. 2 of them have already started, and gradually we'll increase production by increasing our injection into the fields.
So usually on enhanced oil recovery, what kind of return do you get? The first year it's a little bit lower, and then afterwards it starts to pick up. What kind of returns would you guys be aiming for in like year 2 of your water flood?
Sure. So you're absolutely right. It takes quite a bit of time for the receiving wells to increase oil production, pressurizing the reservoir first. So in the first year, the return isn't that high. The second and third year, you normally see a 20 to 50% increase in production from your well bores. And as that grows, you can then find the balance line between maximum injection of water versus maximum recovery of oil, and then you provide an equilibrium and do not go higher than that.